One of the things investors miss the most is decreasing their expenses. It's all about how much money you can make, but not so much refining. And right behind me is our office building. We just moved in yesterday, and it is day 2 of being in the office, and it has been an amazing experience to have a headquarters, to have a place of operations for our multifamily rental business. If you're not familiar with who I am, my name is Trevor B. West. I buy and renovate multifamily rental properties here in Northeast Ohio. We have a portfolio of about 90 units. And in this video, I'm going to show you how we not only operate out of this office, how we acquired it, but how we actually make money by operating out of this building. So we went and renovated the entire thing. We're gonna do a quick speed tour of the entire building just so you can see what it is that we're working out of, and then I'll go into to explain how we actually make money from this building. Let's go. So stepping right in, we bought this building in about December, so it's been 7 months. We've had our contractors on different projects and doing different things, but it has taken some time to get this done, but we'll show some before and afters. I'll bring that up on the screen. But what you're looking at is the finished product. We still have a lot to do, but we have this sitting area. We'll get a coffee station over here. Come on in. So we added a kitchenette to the building. It's nothing super crazy, but we got a sink, we got a microwave so we can heat up our stuff, wash our dishes before we take them home. And so this is a big step for us because I've been working from home for 7 years. My entire real estate investing career, we've been working from home. I even have an employee who was working out of our house for a while, and then my wife got pregnant, so we weren't working out of the house as often. So we had her working from her house. But this is just to show you really quickly what we got. Let's actually say hello to Mila. Mila is on our team. She does an incredible job. She's our property manager. She handles everything from renter relations to leasing to all the things that go on with the operations and the day-to-day activities. Mila is an absolute crusher. Couldn't do it without her. But she's got a bunch of stuff that she's taking care of, so we're just gonna keep that in here. Here's just a quick peek of the office that I'll be working out of. Eventually I'll get my stuff in here. My contractors will get their stuff out of here. So this is what we're working with. And big mindset shift, because this is a place where we can come together. When you're running and managing a team, when you're running a business, having a place where you can co-locate is absolutely critical. And so now, how is it possible that we can operate out of the space and it doesn't cost us anything? And that's the beautiful part about real estate investors. If you don't know, if you watch some of my previous videos, I'm a BRRRR investor. Buy, renovate, rent, refinance, and repeat. We use that strategy on everything that we buy. Every 90 units in our portfolio we bought through the BRRRR strategy. And this office space is no exception. So maybe you're familiar with mixed use real estate. And that's exactly what this building is. So we're gonna go out this side door and we're gonna show how is it that we make money on this building. So if you just look here behind me, maybe you can back up, camera woman, beautiful, beautiful, lovely camera woman. You can see that this was actually an addition to this building. Right here, we have a 4-unit multifamily property. These two combined make it mixed use. Mixed use meaning it's commercial and it's residential in one location, and that is what we have going on. So we'll walk to the back here and you can just kind of see what the back end of the property looks like. But when I saw this property, it was simply a no-brainer because it's income producing. There was room to add value to the property, and this is exactly how we are able to bring in cash flow that pays for the front end of the unit. So right behind me, we took some cash, and we're going to break down the numbers here in a second. And we renovated some of these units. We added value to the property to increase rents, increase the operating income of the building, and that's going to enable us to refinance down the road, get all of our cash out, pay out our hard money lender, pay out our private investors, and then we get this building without having to bring any of our own cash to the table, and also make money on the end of the day. So let's go back in, and we're going to talk about some of the numbers that come down to this property and some of the things that went into it. And what I think you're going to find is that it's simpler than you think. Buy, renovate, rent, refinance, and repeat is just about the numbers. Once you can understand the numbers, you can use this strategy anywhere in most markets. I think that the best locations to implement the BRRRR strategy is in the Midwest. That's Ohio, that's Pennsylvania, Illinois, Indiana, some of those other, Kansas, Iowa, states like that, where you're not in the hottest of the hottest markets, in Miami and California and New York and even Columbus, Ohio. I still think it's possible, but you've got to be so deep into the market, like somebody like myself, and you should be someone who's so deep in your market that when deals like this come up, people call you and say, hey, I've got an opportunity for you. Now, let's look at the numbers for this building. When we first came across this, because we were looking for office space, they wanted $150,000 to purchase this building. They had already dropped the price quite a bit because they'd been selling, and I just hadn't seen it. And so when I contacted the listing team, we walked the property. There were some issues, as there always are. There was some foundation stuff going on that we took a look at and realized it needed to be repaired. There was some roof issues. The units need to be renovated. And then, of course, this beautiful office space that we're sitting in now was not quite so beautiful. Bringing up pictures of that, you can see the transformation that this place has made, and that obviously came at a cost. So we needed to get the property for the right price. And $150,000, so this is 5 units total, 4 units on the back, 1 unit here, makes it a 5-unit building. That's a pretty decent price, $150,000, but we still negotiated down. We ended up offering $107,000. They met us somewhere in the middle at $120,000. So realistically, we got an amazing price for this building, $25,000 a unit. And so the way that we got it is we used hard money. As always, if you've seen any of my videos, I use hard money on the acquisition. I built an incredible relationship with my lender on that side of the house, and they funded the vast majority of this acquisition. And then I went and raised private capital from my private lender network, and that was $75,000. So the original plan was to put $10,000 in each of the residential units in the back, and then somewhere between $25,000 to $30,000 here in the main portion of the office. And that's basically what ended up going down. And that's our strategy across the board when it comes to renovating our residential units. Renovating an office was a new task for me, so we didn't quite know exactly how much was going to go into it. So that's why we raised the $75,000. We raised more than we needed. The foundation and roof issues ended up being super minimal. We didn't have to do a ton, so we saved some money there. So our all-in cost was $120 plus $75,000, $195,000, right? So the units that are being rented in the back, anytime we take over a building, we don't want to go and take their units from 600 or 650 all the way up to market, which is 800. So we're slowly in the process of doing that. 1 unit vacated before we closed, so we renovated that unit completely, raised the rent to $800, and the other 4 units are at $650. The main thing that we changed is that those renters were not paying any utilities. They were paying nothing. So we switched them, and our standard process is to have them pay water, sewer, trash, electric, gas, every utility that they'll use, they're going to pay for, because as a business owner, we cannot take that expense. As I said in the very opening of this video, what investors miss is all they want to do is increase the income, but they don't decrease the expenses, and they leave so much money on the table. And we're learning that heavily here in our business across 90 units. I am certain, and that's what we're working on, is that we can add thousands and thousands of dollars per year to our bottom line without buying another unit. Scale to be better before we scale to be bigger. So switched them over to paying utilities. Now that total for the 4 units in the back is $2,750. Right now with our hard money loan, we are paying $1,500. So we're already making a $1,200 spread on this building alone. Now, of course, when we refinance, that number is going to change, but let's look at what that is. So the reason that this works, commercial multifamily is what this building is. It's a commercial asset. It's based off of income rather sales approach. So the more income this building makes, the more valuable it becomes. And this is why commercial multifamily, commercial assets, BRRRR is an unbeatable strategy. So what our company, our management company is going to do, because I have the real estate rental side, we have LLCs that own all the properties, and then we have a separate entity, which is our management company, Storehouse Real Estate, that manages and does all the collects the rent, does all the things. And so what Storehouse Real Estate is going to do with this building is rent from the LLC that actually owns the building and pay $1,200 in rent. So that takes us from $2,750, and with the $1,200 from Storehouse Real Estate, takes us up to $4,000 per unit, or $3,950. So we take that and we multiply it by 12 months. So the annual income for this building is $47,400. Now, standard process, this is how I calculate the numbers for every deal that I buy. We take that $47,400 and we multiply it by a 40% expense ratio. What that looks like on the calculator is $47,400 times 0.6. And that gives us a net operating income. And I've got a whole video on what net operating income looks like and what that means. I'll link that right here above. But our net operating income is $28,440. Now we divide that number by our cap rate, 9% cap rate across the board for everything that we buy pretty much. And that gives us a valuation, meaning the property is worth, now that it's fixed up, rented out, all the things, $316,000. So we've added $200,000 of value to this little 5-unit building. And so that $316,000, we take that number comes from the appraisal, as long as they're doing it right and going based off the income approach. We multiply that by 70% because the bank is going to give us loan to value. They're not going to give us 100%. So the loan to value number that the bank is willing to lend us is $221,000. So let's again do some math. 316,000 times 0.7 gives us $221,000. And then we subtract the $120,000 from our hard money lender, which leaves us with $101,000. Then we subtract the $75,000 from our hard money lender's principal investment, plus 12 months interest, and I paid 12% for this particular deal, which gives me $9,000 off of that 26, leaving me with $17,000 of tax-free income. So not only when we go to refinance this, we'll get a check that will keep $17,000, but also let's go to Carl's mortgage calculator. And Carl's mortgage calculator is absolutely money. If you don't have it, you need it, because this is exactly how I run the numbers to get evaluation, what I can have my all-in cost, what I can put into the property, how much I'm going to be paying per month, and get an accurate number in minutes anytime I'm evaluating any property. It's exactly what I did to buy this property, to make sure I knew it was going to be a good investment for me, for my business, for my partners. And when I say partners, I'm talking about my hard money lending partner, my private investor. So we take that 316, we plug this into Carl's mortgage calculator, and then we put the 30% as our down payment, meaning 70% LTV. We're going to leave 30% in the deal, And so that gives us our 221. And I always factor high. I think I'll get better than an 8% interest rate. But I put 8% just to run conservative. 30-year note, annual insurance, we plug that in. Let's just call that $2,000. I'm pretty sure the insurance that we have on this is less. And then our taxes are probably about $3,500. So that gives us a total payment of $2,081. Now remember, on paper, Storehouse Real Estate is paying $1,200 to rent this out. And then we have the $2,750 on the back end, bringing us to $3,950 per month. Now, when it's all said and done, if we just calculated the back end of the unit, the 4 units, $2,750, that gives us a spread of $670. And all those units aren't even at market. We can bring each of those units, with the exception of the one, we can bring 3 of those units from $650 to $800, which is going to add $450 to our bottom line, taking us over $1,000. And of course, we have expenses and different things. So even if we cut that in half, say of our net cash flow, we take 50% just for miscellaneous, just for the rest of the things that we might need to pay for. That's going to leave us with a $500 net at the end of the day to operate out of a building. And that's just absolutely huge. If you're an investor, and I'm assuming if you're watching to this point, you are, there are opportunities that exist. And this is why I'm a firm believer that the BRRRR strategy is the best strategy to buy real estate, especially in the Midwest. You don't have to live in the Midwest to invest in the Midwest. And this strategy is everything that I do. Rinse and repeat every time, refining it, getting sharper, doing the same thing over and over and over, becoming an expert at this specific strategy has changed our financial future forever. And if we just continue to keep our eye on the ball, don't waver, put our blinders on, we'll look up in 10 years and think, wow, look at how God has blessed us. Because the Bible talks about how the diligent are the ones that succeed. The disciplined are the ones that succeed. The ones who have wise counsel are the ones that succeed. And if you're still watching this, you're probably wanting to know more about how to do the BRRRR strategy, how to invest in real estate if you're not already started, or maybe you're looking to grow and scale from a few doors to dozens of doors. What I'm offering right now is a one-on-one challenge. It's called a tiny challenge, where for 5 days, we will go 1v1 on a phone call or on Zoom, whatever works for your schedule. And I will break down how I find, fix, and finish these deals, how we acquire them, how we fund them, how we renovate them and manage them on the back end, because that is really where the work begins, is operating the deal and making sure it's successful. So if that's something that you're interested in, comment below. We'll get some information exchanged and work on, hey, how can we jump on a call? How can you get started in this space? It's just $50. $50 to get started. You'll get time with me for 5 days straight on how you can get your foot in the door and either start or grow and scale your business. But this has just been an awesome time. Thank you so much for watching. I hope that this video served you. I hope that this video blessed you. Go ahead and like, comment, share this video so other people can jump on this journey as well. May God bless you and Godspeed.